is there a feeling out there that the restructuring's now pretty much complete and it's a case of looking forward again, or are they still only halfway through?
I would say they're more than halfway through. I mean, they've done a number of critical changes, announcing the move of manufacturing to outsource, changing the distribution model, and I think that Amazon deal is part of it. You know, the last piece that they indicated, and this is still more forthcoming, is that they are going to rationalize the store footprint. Obviously, you know, 3-4 years ago, no one knew what a Peloton was. Today, I think awareness is very high, and so having all those physical stores is probably unnecessary.
This deal with Amazon, is it seen as now the sort of heydays of high margins? Not that they ever really achieve them, but the possibility of sustainable high margins will never arrive, or this is a good step and it'll help their volumes?
Look, I think it's a good step. It helps volumes. There's obviously a customer that loves the Amazon ecosystem. This is just another way for them to present their product to that incremental customer without obviously having the same kind of overhead that's required, either if it's occurring in their own channel or in the store fleet.
I mean, is there a risk, though, that the kind of quality of the brand is going to slip in customers' eyes? I mean, it's an expensive product. You're now having to assemble them more at home. It's not delivered by Peloton branded trucks and employees that kind of adds to that weight of premium product. Is that an issue for them long term?
It's something they've definitely acknowledged, right? I think you're going to see them work very carefully to try to ensure that great customer service level, but it will be different, right? Not having devices delivered by that Peloton employee, having that same exact white glove service. So I think it's something we're going to have to watch very closely in the near to medium term to ensure that they still deliver the kind of great service that Peloton is known for, but do it in a much more cost-effective way than when they were running their own trucks with their own delivery people.
In terms of the outlook for subscribers and customers, I mean, clearly we've seen of late a couple of the streaming companies like Netflix start to lose subscribers. Whether that continues or not remains to be seen. Is Peloton better protected from that possibility if we enter recession, because people have spent so much on the bike in the first place that they're going to be less likely to want to turn off that subscription?
We do think that the churn levels will remain relatively low. That said, similar to other, streaming services, we do think churn will move up. To your point, one of the things is that in many instances, the consumer is still paying for that bike, right? And without that service, right, the bike doesn't really work. So I think that induces more customers to keep paying. That said, we are seeing more bikes come up for resale, which does indicate that maybe there was a group of pandemic purchasers that are less excited about their bikes today.
So talk us through what the valuation is today, Ed, on your numbers, and what your call on the stock is.
We put a $12 price target on it. I think we're a little bit concerned about the near-term conditions. I would tell you that we think they'll do about 3 million ending period subs. But we're watching pretty closely. I think Barry's doing a great job at trying to stabilize the business, which we think that they've done. And so I think we're patient, but we see the longer-term value behind the sub business.